morning. It's the midweek edition of Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. Let's kick off with updates on the global oil markets. Prices fell in early trade as industry data pointed to a big build in crude oil and distillate stocks in the United States, the world's largest oil consumer, and as pressure mounted on OPEC to increase supply. Brent crude futures fell by 98 cents to $83.74 a barrel, while U.S. West Texas Intermediate crude futures tumbled by $1.32 to $82.59 a barrel. President Joe Biden, speaking at a climate summit in Glasgow, blamed a surge in oil and gas prices on a refusal by OPEC nations to pump more crude. Data from the U.S. Energy Information Administration, the statistical arm of the U.S. Department of Energy, will be released later today. And back here, the Nigerian National Petroleum Corporation says there is no plan to hike petrol pump price, but admitted that there are pricing issues at some petrol depot in the country. There has been reports that fuel queues resurfaced on Monday in the Federal Capital Territory and some parts of Nasarawa and Niger State. The Group Managing Director, NNPC, Mele Kyari, while delivering a presentation at a conference organized by energy correspondents in Lagos on Tuesday, said the corporation had adequate stock of petrol. The NNPC chief says the corporation's objective is to provide energy security for Nigeria and ensure availability of petroleum products in the country. And the Nigeria Investment Promotion Council has announced an $8.9 billion investment inflow into the country for the third quarter of 2021. The acting executive director of the NIPC, Mr. Emeka Ofo, who was speaking at a news conference in Abuja, explains that 33 projects were tracked under the same period across 8 states, with the month of August recorded as the most active. Top sectors that attracted investment for the third quarter include manufacturing, electricity, gas, as well as the ICT.
For the Q3 2021 investment announcement, manufacturing had the largest cuts in terms of investment announcements. So we see manufacturing companies in Nigeria, we see investors showing more interest in the manufacturing sector during the Q3 of 2021. Concerning the manufacturing sector, we recognize that it is the fulcrum of the economy. So as we see prospective investors showing more interest in the manufacturing sector is something of encouragement to us because they create jobs, they impact on the economy, and then it shows that prospective investors are looking at manufacturing the things we need within Nigeria. So it is encouraging at the moment that we have prospective investors showing interest in the manufacturing sector.
And to the topic of the day, the month of October saw the Nigerian equities market broadly positive, with the all-share index crossing the 40,000 mark, which it started the year with. However, there was bearish tilt in the movement on the first trading day in November. As the year gradually draws to a close, are we likely to see a stellar performance from the Nigerian equities market again this year? Bolaho Ologoro, research analyst with Cordros Securities, will tell us. That's in a moment. Do stay with us. Good morning, Bolaho. Thank you for joining us on the program this morning.
Good morning, Chimezi. It's good to be here once again.
So, October could be described as a good month for the equities market, and on Monday, it quickly reversed. Yes, we saw a drop, on the first trading day, that was Monday. And then yesterday, it quickly reversed into the green after that Monday drop. Now, fourth quarter of the year must be a great one for the equities market. Am I right?
Yes. So like you rightly mentioned before the break, we saw the all-share index crossing the 40,000 psychological mark in the fourth quarter of this year, last month. And if you look at the performance of the market last month, you saw the market posting a gain of about 5.3%, which you raised the year-to-date loss, at the start of the fourth quarter. So currently now the market is a positive region with a year-to-date returns of about, 4%. So for us, we think this is reflective of investors' expectations of, impressive dividends that will be declared by companies in 2022 in the first quarter to be specific, and that has more or less driven buying interest in dividend paying stocks. And if you look at the Q3 earnings published last week, broadly impressive performances across board from the banking sector to telecoms and oil and gas sector as well. So this is more or less supported investors buying interest in the market. But yesterday we saw more profit-taking activities as investors decided to book gains on those stocks that have recorded significant rally over the last 7 weeks.
Now, the Nigerian stock market was set to be the best performing market in 2020. That was despite the pandemic. With the trend that we are beginning to see this fourth quarter, do you see that happening again this year?
Yes, last year was a different year entirely, and we don't think some of those events that supported the markets last year, and unfortunately, are likely to play out this year. If you look at, yields in the market, in the fixed income markets last year, at all-time low levels. Below the entire yield curve was below about, 6%. And if you look at yields on treasury bills, about 1% levels. But this year we've seen significant advancement in yields in the fixed income market. So that singular factor alone, implies that the gains we see in the market this year is unlikely to match the gains we saw last year. But what is more important is, with the positive earnings we've seen thus far from companies, we think it will remain supportive of a broadly positive performance in the fourth quarter of this year. For our based on our estimates, we expect the year-to-date returns in 2021 to settle at 5.5%, and as of yesterday, we're already at 4% levels.
About the earnings that have been published so far, how would you assess the performance so far? Which results stood out for you?
Yeah, so looking at it generally, I think earnings published by companies across sectors has been broadly impressive. But if you want to probably pick out the star performance, you look at the likes of MTN. So we've seen sustained growth in data revenue. That has been supported by the country's favorable demographics, in addition to the company's investment in, improving 4G coverage across the country. We've also seen recovery in voice revenue that was significantly affected last year due to lockdown rules that affected activities in the informal sector. But we've seen sustained pickup in, voice revenue. So MTN, we saw, strong earnings from MTN. As at the 9 months of 2021. In the oil and gas space, we also saw strong numbers from Total, which is more or less the market leader in the downstream space. So the company has been able to more or less leverage on its strong, footprint, wide range of, retail outlets in pushing volume. So that really supported, its performance for the 9 months of, 2021. For the agri players as well, Commodities and Presco, we also saw, very strong numbers from, those players in the agri space. Given higher prices of CPU in the international market, in addition to recovery in demand in the domestic market, given the full reopening of the economy. So those were the star performance in the third quarter of this year. However, the major concern for us, has to do with the consumer goods company. And what you observe is the fact that cost of sales grew faster than revenue, which is, reflective of the impact of, higher cost of importing raw materials, given the devaluation of the currency, in addition to, high level of inflation in the economy. And of course, for consumer good companies, as a result of, the faster increases in cost of sales, that's affected, margins. We saw, margin compression across board. So that still remains, a significant pressure point for companies in the consumer goods space. But all in all, we think the Q3 earnings were broadly impressive.
What about the banking sector? What do you make of the results so far from the companies there?
Yeah, so for the banking sector, more like a divergence, which is very similar to what we saw, Q2 of 2021. So if you look at the likes of Access and UBA, they were able to deliver stronger growth in earnings. Why? Zenith Bank more or less delivered flattish growth in earnings. For GT Bank, for GTCO now, the holding company, they delivered, decline in earnings. But for us, looking at the factors that are sort of influenced earnings in the banking space, in terms of yields on assets, that still remain largely pressured. Given the lower yield environment that kicked off since the 2020, that's the prior year. Aside that, we also observed that banks have continued to record significant growth in fee and commission income. So if you look at major line items like e-banking fees, ATM maintenance fees, charges rather, we've seen significant growth in those income lines. And we think this is largely supported by the reopening of the economy, which has more or less allowed consumers to begin to go back to their usual daily activities bordering around general commerce. All of these activities have picked up. Another income line that we are also impressed with in their income statement has to do with impairment charges. So last year we saw banks recording very high impairment charges due to the weak macro conditions. But thus far this year we've seen gradual reduction in impairment charges, and that has continued to support their performances. So for those that were able to perform exceptionally well compared to their peers, Access and UBA, and that's just that was supported by the ability in growing their loan book faster, which more or less supported interest income on loans and advances. But for the likes of GT and Zenith, they also grew their loan book, but not as much as we saw in the case of UBA and Access.
Okay, let's look at the fixed income market. What is your assessment on the level of activities there?
Yeah, so looking at the fixed performance of the fixed income markets last month, we saw yields in the treasury bills market advancing by about 8 basis points, which is just marginal. In the bond space as well, we saw yields advancing by about 9 basis points. And we think this was due to investors' reaction to higher stop rates offered by the DMO at the bond auction conducted in the prior month. And again, we also noticed that some investors more or less decided to liquidate their investments just to free liquidity in order to buy the Euro bond launched by Access Bank of about $500 million. So we think those two major factors were responsible for that slight uptick in the yields in the fixed income market in the prior month. But looking ahead into the rest of the year, our expectation is that given the recent Euro bond raised by the federal government of about $4 billion, that should reduce the federal government's reliance on the domestic market in terms of issuances of domestic debt instruments. So we think that should be supportive of lower yields in the fixed income market going into the end of 2021. But more importantly, we think the GMO would also remain concerned about minimizing the cost of debt servicing to the federal government. Given the current high level of debt servicing cost, we think that would also play a role in keeping yields at these slightly low levels as we go into 2022.
Now, and to the FX market, considering the significant increase in the FX reserves, what is your outlook on the currency for the rest of the year?
Yeah, so for the foreign exchange reserves, we've seen significant accretion in the FX reserves, given the federal government's raising of Euro bond, in addition to IMF SDR of about $3.4 billion. So currently our reserves are currently at about $1.7 billion, which is just shy of about $42 billion. So what we expect is that should improve liquidity at the I&E window. And to just give insights on the state of liquidity in the I&E window, and between the months of August and October, we've seen significant improvement in, the average daily value traded at that market, at that window rather. So if you look at, as of August, average value traded stood at about $120 million. But if you look at the average in September and October combined, we are currently at around $200 million. So that is a significant improvement, and we think it will be sustained, for the rest of the year, given the strong level of external reserves that should improve the central bank's ability to supply dollars, to that window. But we still see scope for, further adjustment in the currency. And the reason for that is most of the inflows that we've seen into the country this year that has supported the external reserves are more or less one-off inflows. And of course, those one-off inflows are unlikely to provide, medium to long-term solution or stabilizing the currency. So we think the CBN will still need, inflows from, FPIs. And to do that, they probably have to adjust, the currency at the I&E window from current levels of 410 to 415 to about 440 to 450 levels. Just to give, incentive for FPIs to bring, those dollar inflows, back into the country, following, the massive outflows we recorded in the prior year.
Now, you and I know that the central bank is not attuned to price adjustment at the FX market, but given the situation in the market now, do you envisage the return of FPIs into the country?
Yes, we see scope for, gradual return of FPIs back into the country, but we think, those inflows are likely to be, very significant. And the reason for that is we still have, sizable backlogs at the I&E window that, the CBN is yet to clear. So if CBN is able to do that, in the fourth quarter, then, that would sort of improve, foreign portfolio inflows back into the country. But I think looking, beyond the fourth quarter, and if you look, further into 2022, being a pre-election year and the fact that, foreign portfolio investors tend to attach, higher political risk to the country, that would, more or less constrain them from, returning back in droves, into the country, just like we saw, in 2017 when we just, came out of a similar, dollar crisis in the economy. So we think that is sort of, a factor that would put a cap on, the extent to which foreign portfolio investors would turn back into the country. But nonetheless, we think that, with improvement in liquidity at the I&E window, we should see, improved, dollar inflows into the country. But certainly, we don't think it will be as significant as, widely expected.
Now, African central bankers, of course, will be meeting this month at various points to, talk about the next monetary policy environment. What are your expectations from the Nigerian Central Bank?
Yeah, for the central bank, we don't expect any major shift from the guidance they have given to the markets earlier. So they have communicated that, their short-term policy objective is to support, economic recovery. And we think that is likely to be, re-emphasized at the last policy meeting, holding this month. So we still expect MPR to be maintained at 11.5% alongside other policy parameters. But what we think is more important is, the CBN should be able to give, forward guidance on when, they intend to switch to a more, hawkish policy just to, push down inflation, downwards, and probably also address the imbalance in the external sector. But for the month of November, we still expect the MPC to maintain status quo approach, those monetary policy parameters.
All right. Thank you very much, Bolaho, for your time on the show this morning. We do appreciate it.
Thank you very much. Do have a nice day.
And you too. And AFEX Commodities Market Update is next after the break. Do stay with us. All right, let's turn to the AFEX commodities market. The week that ended November the 1st saw the number of contracts, total value, and number of deals traded at the commodities market all in the green. For more, here is Oluwafemi Kehinde, structuring and origination analyst at AFEX. Good morning, Oluwafemi. Thank you for joining us. First, take us through the week's activities.
Morning, Chimeze. It's amazing to be here. So for the commodities market this week, we actually saw a significant surge in activities in terms of the value traded, the volume traded, and the number of deals executed. The value traded actually surged by about 70%. The volume traded actually surged by about 124%, seeing the execution of 477, 115 contracts executed on the exchange. For the number of deals on the exchange, we actually saw that there was a significant surge as 71 contracts were actually executed for the week. However, the indexes on the exchange actually remained the same as the previously reported week. For the spread of commodities traded for the reporting week, grains actually were the market leaders for the week, as we saw soybean topping the chart, followed by maize. However, we saw a significant increase in the trade of cocoa on the exchange for the reporting week. For contracts traded on the exchange, in terms of the commodities prices that we did, that was executed on the exchange for the reporting week, most of the commodities actually remained the same as the previously reported week. However, we actually saw a significant decline in soybean contract, which declined by about 14.10% compared to the previously reported week. And this might be attributable to the fact that a lot of these commodities are slightly entering into the market, and we envisage this trend to continue over time.
Now, Oluwafemi, we are currently on the harvest of new commodities for the incoming. Where are we on the harvest of new commodities for the incoming season?
Great. Amazing question. So we've actually observed the trend because AFEX currently tracks about 400 open markets across all regions and states in the country. And we've observed farmers are beginning to enter the markets with new commodities. And this is actually going to spur the trade of new commodities by traders and processors. We actually expect this trend to continue in the incoming weeks up until December, as especially for the grain producing states.
And how will the current climate change talk shape activities in the commodities market for the incoming weeks?
Amazing question. So as rightly reported by NIMET, we've observed that for the grain producing states like Kaduna and the likes, the level of rainfall has significantly dropped, right? And we know that farmers actually utilize the sun in drying their commodities in order to get favorable prices for these commodities. So we understand that as a result of the rainfall, we know that more commodities will be introduced in the market, as farmers will be enabled to dry their commodities better and faster and earn more money quickly for their investment.
All right, thank you very much, Oluwafemi, for your time there. In the meantime, AFEX released its crop production outlook report that was on Tuesday. Let's have David Ibidapo, a senior research analyst at AFEX, to tell us more about this report. Hello, David. Good to have you on the program. Good morning.
Yeah, good morning. I'm happy to be here.
So briefly tell us the motivation behind AFEX crop production survey. This is the second of its kind, isn't it?
Yeah, this is the second of its kind, and we started this journey last year, and we don't intend to stop. So we at AFEX, we believe that the agricultural sector holds a lot of potentials, and it's actually key in driving the general economy when you look at the growth potential of the economy, right? And as a result, we believe that unlocking these potentials in the agricultural space, we require policies, and not just policies, but data-driven policies, right? And also, if you look at the trend over the years, you will notice that investment into the sector and also financing in the sector has been low. And if you look at the NBS data, the NBS pegged capital importation to the agri space at about less than 3%, right? And that's very, very low. And we believe that for us to be able to drive investment, for us to be able to unlock finance, we must have to de-risk the sector. And one of the ways to de-risk the sector is by closing up that knowledge gap that currently exists in the agricultural sector. And lastly, for me, I would say that that it's important for us to accurately forecast of production levels and where prices are heading, and this will actually help the players in the agricultural value chain to take position ahead and during the commodity and trading season.
So what were the major findings during this year's survey, and how do you see production levels across commodities this year?
Yeah, thanks for that question. Three major findings for me, amongst other findings, is the fact that we saw that about more than 70% of the farmers that we surveyed actually had more than 10 years experience. But however, shockingly is the fact that if you look at the hectares that they've cultivated or the farm size that they own, right, it's just between 1 to 5 hectares, which actually insinuate that over the years, despite their several years of experience, they've not really been able to extend their farm size, and which we believe is actually critical in boosting the production levels across commodities in the country, right? So it's very, very important for us to start looking at, or start having discussions around how can we graduate farmers from a small scale level to a medium scale level and ultimately a large scale level. Then also we saw that farmers before the planting season are already taking position to take advantage of high prices of commodities. So when you look at the rally that happened between last year and this year, that's 2020-2021 commodity season, we'll see that prices, most of the commodities, their prices reached an all-time high. So farmers were already positioned to take advantage of these high prices, and as a result have shown their interest to sell more bags upon harvest this year. For our forecast around the commodities, we are looking at a potential 3% increase in maize, in the production levels of maize. For paddy rice, 10%. For soybean, around 12%. For sorghum, a marginal increase by 2%. For ginger, 4%. And for cocoa, we are anticipating a decline of -8% at least.
Now, aside from these general findings, what were the major challenges faced by farmers this year, and do we see possible policy directions?
Yeah, so not surprising for us, actually, is the fact that long-aged challenges around low access to finance, low access to inputs, low access to storage facilities still top the chart for farmers this year, right? And we believe these are potential policy directions that the federal government and also even private organizations like AFEX can continue to drive to ensure that we stimulate and promote food security in Nigeria, right? So when we talk about low access to inputs, right, most farmers are still challenged with these, and that's why at AFEX we have prioritized building an innovative product that helps unlock finance to help procure inputs for farmers that we believe would help them and ease their activities during planting season. And also for low access to storages, one of the things we've done, which we also recommend for the federal government, is to heavily invest in storage facilities. Like at AFEX, we have over 90 storage facilities across the states. And we understand that without these, farmers will only be constrained to produce what they can store. And increasing capacity would be a very difficult task for farmers.
So how should we expect prices of commodities to behave this year? And what is your outlook in the first half of next year?
Okay, so for prices this year, so coming from the rally that we experienced in the 2020-2021 trading season, we expect prices across commodities we expect them to decline upon harvest, which we're already seeing that trend, right? We expect prices to start at a higher minimum base price across commodities. So, for example, for maize, last year, price of maize began the season at around 130,000 metric ton. 130,000 naira per metric ton, right? But this year we're already seeing maize price around 170,000 naira per metric ton, right? And this is the high minimum base price I'm talking about, and we expect to see this across all commodities. The marginal decline that we will be seeing upon harvest I believe will be short-lived, and what will be driving prices next year will majorly be the stronger demand of commodities that we are seeing currently in the market as against last year, amid other fundamental factors that we believe would also drive prices. And we think this is a potential signal to inflationary pressure. That's our headline inflation, and most importantly, our food inflation for next year.
Right. David, thank you so much for your time this morning. We do appreciate it.
Thank
Enjoy
you
the
so
rest of
much.
the day. I will take a moment. And for opening call to the market, we have Anete here. Anete, the green color is back.
Yes, good morning, Chimi. Thankfully, the green color is back, especially on the second day of November, which is the day 2 of trading at the NGX. So, and then, of course, it was just one market behemoth that made the market to go back into the green color. That, of course, is Boa Cement. But before we go to that market, let's take a look at what happened at the fixed income market. Starting first with the bonds market there, it was bullish. Well, if you want to call it bullish, it was bullish. Average yield there contracted by 4 basis points to about 11.2%. But this is the total number of deals carried out yesterday at that market, 14. And of course, most of the interest was on the 18th of April 2037 paper. But when you take a look at the Treasury bills activity, was bearish there. Not much of activity. Number of deals carried out there was just about 12. And of course, most of the interest was on the 27th of October 2022 paper. So, of course, the fixed income markets has not been having much of activity, especially yesterday. There was no OMO auction. But, of course, we had the central banks, the 29th of November, which is later this month. That paper is still having the only interest there, 5 deals, worth about 8 billion naira and a discount rate of 6.40%. So now we're going to have Ajibola Philip, who is head of fixed income trading at FBN Quest, to tell us more about what's happening at the fixed income market. Thank you for joining us, Ajibola.
Hi, good morning. Thank you for having me.
Okay. Now, I know you're quite aware that the fixed income market is not, there's been a lot of activities, especially because investors there are, they're reacting to recent moderation in stop rate at the Treasury bills market. And of course, we should be expecting some inflows of more than 103 billion naira from the open market operations. Can you tell us more about what's happening there?
Yeah, thank you. Yeah, that's exact sentiment as you described. But however, yesterday market was relatively quiet. I mean, there was a bit of, in terms of yields were a bit depressed, and that's just because of the perceived liquidity that is going to come into the market in the next few days. But overall, most of the activity for that will probably be in the Treasury bills market. On the bond market, we're not seeing so much right now. Where you really have to play right now is in the Treasury bills market, and that's the end of the long end of the curve. Primarily because there's been a, like you mentioned, there's been a drop in yields at the last 2 NTB auctions. So there's that sentiment in the market as a whole that yields might continue, to trend downwards in the T-bills market. For the bonds market, we saw a bit of yields trending up, especially on the 2050s. And that's just because, I think it's because it's getting closer to the auction. The auction is on the 17th of November. So, you see those kind of activities around things that are around the maturities that are scheduled to be at the auction in the secondary market.
Okay. So now when you talk about the bonds market, there's a deliberate effort by the Debt Management Office to reduce government's domestic borrowing costs. And then, of course, the government, the DMO, is expected to issue a 250 billion sukuk for road projects. So now, what are investors, how are they tilting towards this?
It's a bit of cautiousness. On one hand, there's the need to reduce borrowing costs, and then on the other end, there's the need to make up for the little balance that's left for the fiscal year. It's not a whole lot. So, like I said, it's a bit cautious in terms of you don't want to push the yields, to way higher. Just like you saw at the last auction where yields increased a little bit. So we expect that cautiousness is going to play through at the next auction as well.
So thank you for that analysis, Ajibola. So that was Ajibola Ero-Phillips, head of fixed income trading at FBN Quest Merchant Bank. So now let's go back to that market that we were talking about. 0.09% is what we had as at yesterday, the second trading day of November, which translates to about 19.10 billion naira rebound on the market. And of course, that was on the back of the 3.55% gain on the back of Bois Cement's share price increase. But of course, the market volume of transaction was down by 15.6%. And of course, we had at a second day of negative price margin in terms of price performance. We had 30 losers against 10 gainers on the market. But at the same time, they're still reacting to a flurry of earnings. You still had some earnings results released to the market yesterday. Now, let's take a look at the sectoral performance. Banking sector had most of the depression there. The tier one lenders there, they took the bashing, on the back of investors taking profit. Of course, it's just profit taking. Nothing wrong with the market. The market is still on its way with the uptrend, which it has been able to sustain, particularly year-to-date performance. It has increased slightly, so back around 4.3%, and then month-to-date gain has been also a little bit reduced from the 0.15% loss that we saw at the start of the month. So now we're at about minus 0.1%. So we're just hoping that the market will get back into the green at the close of today's trading session. So, but when you take a look at the volume of transactions, that's just what it was yesterday. Was down by 15.6%. Value was up. Deals was down. Of course, that's UBA. The UBA was the most traded stock by volume. It had 52.58 million units of its shares, while Zenith was the most traded by value. It had about 747.64 million units of its shares. So added to the market, that's for Tuesday's trading session. So we will be looking at how, the tier one banks, whether they're able to rev the banking sector back into the green, or maybe it's going to be a continued, downward trend, taking from Tuesday's trading session. But of course, the market, you just can never tell the market. It can have a mind of its own, and then of course, that's you just leave it that way.
We'll keep our fingers crossed, Anita. Thank you. Well, we'll take another quick break, and when we come back, we'll do an opening call to London, and of course, our crypto market segment. Just stay with us. And for developments in London, let's have Juliana in there. Good morning, Juliana. Well, let's kick off the conversation with a climate change talk. UK Prime Minister at the summit announced more funding package, and most big UK firms and financial institutions will be forced to show how they intend to hit climate change targets. Can you talk us through this?
Yeah, good morning, Chimezie. Day 3 of COP26 continues up in Glasgow. The first 2 days, of course, have been about the big pledges. Over 100 world leaders were in attendance. And really, I think the main talking points that came out of that was cutting methane gas, as well as deforestation and reducing deforestation. So day 3 now has been handed over to the finance world. And in a couple of moments, Chancellor Rishi Sunak will be addressing central bank governors and financial institutions, and will try to pit Britain as being the leading country in overhauling the financial world. According to him and the former Bank of England governor, Mark Carney, there's about £130 trillion locked up within financial institutions ready to hit these net zero emissions. And one of the ways that they are going to do this from 2023 is that UK firms and UK financial institutions will have to provide a detailed analysis of how they plan to reach net zero. This can't just be all talk and no action, because once they've produced these dossiers, they will be put towards an expert panel to see if it's going to be realistic. I suppose for green activists, and there are hundreds and thousands of them led by Greta Thunberg, who are protesting outside COP26, it doesn't go far enough because as part of this UK plan, firms must outline, but it's not mandatory. So you say you can do it, but there are, at the moment, not any legal implications for not doing so. But it is a first step. Yes, Britain wants to make sure it's leading the way. So today, COP26 is focused purely on financial targets.
In the meantime, about 24,000 households may be in need of new gas supply, as another 4 energy suppliers have gone bust in a single day as historic gas market highs continue to rip through the UK's energy market. Any idea who the 4 casualties are this time?
Yes, I've got them written down, Chimmy. That's Omni Energy, MA Energy Limited, Zebra Power and Ampower UK. As you said, over the past 24 hours, they're the latest 4 to go bust since the wholesale gas price issue has become a serious concern in the UK. I believe since the beginning of September, about 18 small energy providers have gone bust. This has affected about 2 million customers. Over the past 24 hours, about 22,000 customers have been affected. Even though wholesale gas prices have simmered a little bit, they're still way higher than they were at the beginning of this year. And it really is affecting small energy firms. We know that here in the UK, customers are protected by a price cap, which is put in place by Ofgem, which is the energy regulator. This has been a major cause for concern. Yes, the customers are protected, but industry are really concerned about businesses, especially over the next couple of months. I believe it was last week we discussed during this show that the energy regulator is now going to be embarking on several consultations to see whether or not this price cap has to be raised in the future. The next time it's up for review is in April, so these conversations are ongoing. We will find out in February next year if customers are going to be paid more, because one of the main issues, which is the reason why 18 firms have gone bust over the past 8 weeks, is the price that they've promised to customers. They just couldn't meet those prices because they couldn't afford to do so. So for the customers that are going to be affected by the bankruptcy of these firms, Ofgem has reassured that things will be okay. Their energy will still be provided. They'll just be switched over to one of the big 4 firms, and any money that they've put into their accounts will also be kept in a safe place.
Thanks, Juliana, for updating us on those, and we look forward to hearing more from you later in the day.
Thank you.
And let's cross over now to the crypto market, and we have Ladi there. Hey, Ladi,
hey, Jimmy,
what do we have there?
The market is looking quite green, and November is looking good. A lot of traders there feeling that November will continue to be a bullish month. But we have Ethereum here. Ethereum is stealing the shine. It's broken a new all-time high at $4,500. It's mostly green. Bitcoin also in the green. And we have the market cap now nearing the $3 trillion mark. It's up 2.95%. You see a 24-hour volume traded there, $133.47 billion traded this morning. Bitcoin dominance at 43.38%. And we see Bitcoin there at 62,000 at 8 a.m. this morning. And we have a $36.70 billion volume traded in Bitcoin this morning. Let's bring in Bjorn Martins, now a crypto entrepreneur, CEO, PSI Network. Great to have you join us on the program.
Thank you very much. Really good to be on the program.
Yeah, so, you know, we know cryptocurrency market can be quite volatile. See a lot of new traders come in there and buying the top and end up holding for a long time. What other ways are there to make money in this market aside from, spot and futures trading?
Now, great question. At first, last time you said, for example, staking Bitcoin and USDT, you can earn passive income. This is one of the ways how you can earn extra money on the market. But there are several more ways, especially these days, as the technology really went forward. There's now a way to earn frictionless on your tokens. So by just holding a token into your wallet, for example, our token passive income, you can earn passive income by just holding. You don't need to stake, you don't need to do anything with your tokens, and over time you automatically earn more tokens. There are more in our ecosystem because we of course called passive income. We have built an NFT marketplace where we earn fees on with a company that's worth about 160 million euros at the moment. This is a great income source for the passive income ecosystem. Next to this, we have a launchpad that generates fees for our holders. We have a decentralized exchange that generates fees for our holders. And we have upcoming next month an NFT real estate marketplace that's going to generate passive income.
Right. All right.
So we're making investments.
Okay. Yeah, but this market is quite funny. Some crypto projects come out, and next thing you hear, they're kind of like rug pulls and money grabs. How do investors avoid, such projects?
A very big tip is to not invest anything that is meme related too much. Don't invest any money you can lose. Look for a company that is audited, that is secure, and that's open, public. People that want to come with their face to the public. It's honestly not that hard if you just really look to those green flags, how I call them, and to the red flags. And if you think, oh, they are anonymous, why are they anonymous? Probably they're going to be a scam. Right. So my tip is invest in public teams, in Dutch teams.
All right, Bjorn. Thank you so much for coming on the program. I will have you some other time. Thank you.
Thank you very much. Have a great day. Thank you very much.
All right, let's look at what's happening with the top auto market cap. There we have BNB, $551, up 1.65%. Well, the biggest gainer in this corner is Solana there, $227 is up, a whopping 11.75%. We have XRP there, staying above the $1 mark and nearing the $2 mark. Is up 8% this morning at $1.19. We still have XRP having that SEC issue there in the U.S., but it might be looking good for them. Loopring there. Loopring has been bullish since yesterday. It's $1.49, up 57%. And we have AR there, Arweave, at $85, up 49%. CRO, 24 cents, up 11.6%. At the top losers, we have all the metaverse tokens with Mana, Chiliz ANKR, and Sheep there, down 11, 7, and 10%. Sheep has had an amazing run in October, up over 1,000%. It's down 7% there, less than a penny. And you have QTOM there at $15, down 6.60%. So, Chimi, the market is looking quite bullish right now.
I see that. And one major takeaway from beyond there, don't invest any money you can't afford to lose. Not just in crypto currency market, but other asset class. Yes. Absolutely. Anyway, we keep tracking those markets. Thank you, Ladi.
Thank you.
And that's a wrap on the program. And don't forget to join us by 1:30 this afternoon on Business Incorporated. We'll have more updates for you on developments in the world of business. I'm Chimeze Obi Iwago.